Hi, I'm Bill Blain, strategist, Shard Capital. Very interesting markets that we face this second week of March, and only 3 weeks to go till Brexit Day. Hooray! Yay! Well, market's still very confused about what's going to happen. Last night I got a phone call at 12 o'clock from an American client asking me what the agreement or the victory that Theresa May had just announced from Brussels meant. Of course, I had no idea what was actually going on. This morning, we've read that the EU has given us new language on the backstop agreement, but we have a big vote in Parliament later this week, later today, in fact, which could spread through the whole week. That's going to create continued uncertainty on where sterling's going. Yet, after last night's news, sterling rallied 2 cents and is sticking there fairly stable. The expectation is that Theresa May stands a much better chance of getting an agreement, and the EU and the UK will be able to divorce in a fairly friendly fashion, maybe not by the end of this month, but fairly soon. Markets are calmer on the news. Still a lot can go wrong, but the expectation that we have been feeling through the city, by that I mean the London financial markets and the global financial markets, is that Brexit is not really a market issue. Brexit is far more a political issue, a football that folk want to show off with. Rather than reaching the most sensible, pragmatic solution, politicians have been using it to establish reputations and positions. As a result, the city has rather backed away from many of the arguments, taking the view that long-term, whatever the relationship between Europe and the UK is, it will develop in a way that is going to be mutually beneficial rather than antagonistic. And that historically has always been the way it has been, that we will find a new relationship that is profitable to all sides. That's the way that commerce works. So the market is far more sanguine than the politics would suggest. We'll know later this week and by the end of the month exactly how Brexit's going to go. Returning to the markets then, away from Brexit, we're in a curious kind of hiatus just now. There are no real trends going on that you could point to say that this is the real thing that markets are looking at. You could look at last week's US trade employment numbers, which were down quite substantially from expectations, but that may have been due to the extremely bad weather conditions in the US at the end of January and in early February. There's a lot that can be read out of a single number, but you really need to look at the trends to understand how it's really going. Elsewhere, the global economy continues to look soft. And by soft, I don't mean it's retreating. Certainly in Asia, all we've done is see a slowdown in growth rather than a stop. Europe is more problematical. Last week, the European Central Bank was forced to announce a new set of long-term loans to banks. I think that was inevitable. The banks were never going to be able to pay off their existing loans from the ECB unless they received new ones. That doesn't say much for the security of European banks. But it's great news for European bond markets, because suddenly the banks know that they will continue to receive effectively free money from the ECB, which is likely to drive European sovereign bond markets, which removes another source of worry for us all. Finally, let's move on to Boeing. I'm sure many of you will have read about the crash of an Ethiopian Airways Boeing 737 MAX 8. It's a very similar circumstance to a crash we saw 5 months ago when an aircraft from Lion Air crashed in Asia. In both cases, the aircraft had just taken off. They had very experienced crews, good weather conditions, yet in both cases, the aircraft failed to climb in a smooth way and ended up stalling and crashing. It turned out in the first case there was a suspicion of a sensor fault with a new stall prevention mechanism, which the airline claimed to be unaware of. And certainly it does look like Boeing had not put that information in the initial package of information on how to fly the plane. I know that may sound a bit basic, but the new Boeing 737s are designed to be easily skill transferable from the older mechanisms, which is something that appeals to airlines operating the plane. If they can simply transfer crews from older 737s into the new ones, that's very simple and cost effective for them. After the Lion Air crash, Boeing did put out a very clear guidance on how the system worked, and we don't know yet what caused the crash in Ethiopia. We won't know for a few days until the voice box and other black boxes from the site are fully examined, but the reaction in the market has been to suspect some fault. Boeing stock crashed quite significantly yesterday, and many airline jurisdictions like Australia, Singapore and China have grounded the fleets. That is an area of concern for investors in aviation-related bonds and in Boeing stock. In the next few days, we'll get a much firmer idea of what actually happened, and that will set the course for how the stock performs from here. But it is one of the things that has the potential to upset markets when you see a tragic event occur and it causes major questions to be asked about one of the leading air manufacturers. What have we got to look forward for the rest of the week? Well, it's going to be Brexit and what happens next with Trump. All eyes on Korea there. If North Korea launches a new missile test, then we could be into a whole new game next week.